And at the end of a busy week selling his budget, I spoke to Treasurer Wayne Swan in Brisbane on Friday afternoon. Well, Treasurer, the sensitivity analysis in the budget papers this week show that a 4% move in commodity prices produces a $6 billion change in the budget balance. Now, the RBA commodity price index moved 4% last month, in 1 month, and $6 billion is almost twice the budget surplus that you're forecasting for 2012 and 13. Doesn't that just show how wafer thin it is, how vulnerable it is?
No, I don't think it demonstrates the point that you're making, because the central forecast is to come back to surplus. The central forecast is based on conservative forecasts, I believe, in terms of commodity prices. As you know, our terms of trade are high, at 140-year highs, and we are a major beneficiary of that. But we don't think for one moment they will stay there forever. So we do bring the terms of trade down over time. But what you are dealing with is sensitivity analysis. It is done on the downside as well as the upside, but it is not the central proposition which is put at the core of the budget.
But the point I'm making is that a 4% move in commodity prices can happen overnight, which means that your budget can just get blown up.
Yes, but the point I would make to you is that our forecasts are not that dissimilar from the RBA's forecasts either, and they have the same expectations that we have in our central forecast for the terms of trade.
The other forecast I'd like to draw your attention to is that the budget papers forecast an increase in company tax revenues of 36% over the next 2 years, up to 2012-13, which is what your surplus in that year is built on. The consensus market forecast for company profit growth over the next 2 years is 25%, 10% less than the budget papers predict for tax receipts growth from companies. And the market's usually too optimistic.
Well, I certainly don't accept that at all. I don't think that our forecasts on revenue are that different from some of the forecasts from the major forecasters with the major banks, for example. But I'm happy to go through and have a discussion about revenue. I think that is a really important topic to discuss today, because our revenues are down by some $130 billion from 2008-9. That is the hangover, if you like, of the global financial crisis. And, of course, our deficits this year and next year are up substantially because of those revenue write-downs. But I just remind you of this one point, and I think it's been lost in the debate this week. That is, growth in this year is down by 1 percentage point, but we've got growth forecast next year of 4%. What that really means is that next year we are expecting the economy to be growing strongly, and we do expect revenue to recover with that. I don't think our forecasts for revenue as we go forward are too optimistic at all, and neither do most of the other forecasters, who generally agree with our forecasts in terms of the deficits and the return to surplus.
You rely on Treasury forecasts, Treasurer. You don't make them yourself, of course.
That's right.
But incorrect forecasts just 6 months ago have resulted in an increase in the deficit for this financial year of $9 billion and an increase in next financial year's deficit of $11 billion. I mean, how much confidence do you have in their forecasts?
Well, I have an enormous amount of confidence in the forecast, because what you've just said completely ignores the impact of the floods and Cyclone Yasi. They were the biggest natural disaster in Australia's history, and combined with the natural disasters in both Japan and New Zealand around the same time, have had an enormous impact on growth in this year. You see, the whole world changed dramatically in January through February, and the economy as a consequence has slowed. That is what you are ignoring when you make that point. And you can't say that the Treasury are at fault because they didn't anticipate a natural disaster of the magnitude that we have been through.
Well, OK, that's a part of it, but what they did get wrong is the extent to which companies would use depreciation and write-downs to reduce their tax.
Well, certainly it has, and we had predicted originally a write-down of something like $210 billion if we go back a couple of years. Now, of course, the economy began to grow because our stimulus was so effective. On top of the stimulus, the strength of our trading partners began to grow, and we began to grow strongly. But there's no doubt, and the budget papers make this really clear, that those accumulated losses are a hangover and they are impacting on the revenue. But I go back to the point that I made to you before. We are going to grow at 4% next year. You can't ignore that fact on revenue, and that is reflected in the return to surplus along with other factors in 2012-13.
But do you accept that this week's budget did not deal with the structural deficit at all, and that the forecast return to surplus in 2012-13 is entirely dependent on the increase in tax revenues forecast as a result of the forecast growth in GDP and the forecast mining and energy boom?
Not at all. I don't accept that for 1 second. We have made some substantial structural changes in our savings. 2/3 of our savings are savings on the spending side, and 1/3 relate to tax expenditures. If you look at what we've done on the tax expenditure side, they are all substantial structural saves, not just for the next 4 years, but for the next 40 years. What we've done with the dependent spouse tax offset, what we've done with the taxation of fringe benefits and cars, and a number of other measures. You see, we've also made substantial headway in this budget with tax reform through both dealing with those tax expenditures, but also making sure that the revenue is there, and it is, from the mining resource rent tax, which will fund a cut in the company tax rate, which will fund cuts in taxes, particularly through the 5,000 instant asset write-off for small business. So there's a lot of reform in this area in the budget.
Well, I suppose what I'm talking about is the period up from now until 2012-13, which is when the budget is forecast to return to surplus. Government's decisions actually have an impact of minus 2.5 billion.
No, that's inaccurate, Alan. There's a net save, and I'm happy to go through...
No, there's not. I've got the figures right in front of me.
Yeah, well, you're looking at the wrong table. There is a net save of $5 billion. It is all there. I don't have the document in front of me, but I'm happy to send it to you. It's a save of $5 billion. That's what I'm most proud of. Savings of 20...
Well, that might be over the whole forward estimates, but I'm talking about the period from now until the surplus in 2012-13. Government decisions in this week's budget definitely represent a minus.
No, there is a net save over the forward estimates of $5 billion. You might want to cut them around a bit, but the fact is that a number of these changes we are making cut in at different times or produce more revenue because some of them are phased in. That's just a natural consequence of the policy process. It doesn't make them any less important than they are. But I do want to make this really important point. $22 billion worth of saves. We've only got an increase in real terms of expenditure over the budget estimates of 1% a year, each year. Compare that to the increase for the last 5 years of the Howard government of something like 3.7, 3.8% every year.